Hey guys, what's going on? My name is Hamish Hodder and we're back with another video. Today we're going to be talking about semiconductor companies, which is really interesting because, as you would know, a while back I made a bunch of videos about individual companies and I did individual stock analysis videos on those in the semiconductor industry, and their prices have been falling, and for some of those companies their prices have fallen into the buy range that I initially suggested back when I made those videos. So naturally I've been getting a bunch of messages and comments about semiconductor companies, and you guys obviously want to hear my thoughts. So in this video I'm going to tell you everything you need to know about semiconductor companies and whether or not you should be investing in them, and by the end of this video, basically the goal of this video is to help you decide whether or not they're a smart investment for you or whether or not you should stay away from semiconductor companies. So that's what you're going to learn in today's video. Just before we get started, I need to say that I am not a financial advisor and I'm certainly not your financial advisor. So everything here is just for entertainment and educational purposes only. I don't know your personal circumstances, so if you are going to be making any financial investments, please consult a financial advisor. So I thought we'd start off this video by going through some of my older stock analysis videos and seeing what valuations I put on those stocks in the past and how that has transformed from then until now. So we'll start off with the first one, which I did a real long time ago, and that was Applied Materials. So I made an individual stock analysis video for Applied Materials, and then I spoke about it again in my 4 stocks to buy for August 2018. So I spoke about it in 2 different videos, but essentially in that first video that I uploaded a long time ago, I showed a value matrix which had a buy price of around $35 per share, or basically at around $35 per share, I saw that there was a significant amount of upside. And at the time of recording that video, Applied Materials stock was at about $53 per share. So $35 was quite a while away. The current stock price for Applied Materials is now $35 per share. So the price has actually dropped 34%, and the EPS in that time has increased by 8%, which means that their valuation has become a lot more attractive over that time. So basically prices come down, earnings have gone up, and that means that overall the valuation looks a lot better than it did when I initially made that video. And then the second semiconductor stock that I've spoken about on my channel is, of course, Lam Research. This was a stock that I also spoke about in my 4 stocks to buy for August 2018 video, and basically in that video I said that I would probably be making an investment if the stock fell below $160 per share, and at the time I think the stock price was about $175. Since making that video, the stock price for Lam has fallen about 17% to $144 per share, and their EPS has remained relatively unchanged. So that means that because the stock price has come down and earnings hasn't changed, the valuation for Lam has also become a lot more attractive than it was when I first spoke about it in that video. But just because the stock becomes more attractive relative to the past doesn't mean that it's necessarily a buy. If you have a stock that's valued at $50 per share, but its price is $100, and then the price drops from $100 to $80 per share, yes, the valuation has become more attractive. It's now $80 instead of $100, but the value is still $50, so it's still overvalued. So that's just something to be aware of when I'm talking about this relative sort of valuation. I'm not saying that because it's more attractive that it's a buy, it just looks better than it did in the past. So essentially, I just want to spend some time talking about my analysis process, because I think this is an area that I haven't been super clear about when I'm making these individual stock analysis videos. When I make these individual analysis videos, I'm generally looking at a company for the first time. So it's the first 3 or 4 hours of research that I'm doing for a business. And at this time, essentially what I'm doing is I'm trying to make a ballpark estimation of its value to see if it's worth further investigation. Because if I do a ballpark valuation and it is an extremely overvalued company, then I have no interest at looking at it. But if I find a ballpark valuation and the stock only has to drop 10 or 20% for it to get there, then that is an interesting company that deserves further investigation, so that if it does fall that far and I can come up with a more accurate valuation and then potentially make an investment. So in terms of semiconductor companies, my initial impression when I did my first research was that if these companies can achieve low double-digit growth over the next 10 years, then they will become a buy if the stock price falls 15 to 35%. So that told me that I wasn't interested in these companies at the current levels, but potentially sometime down the road I would be. So I sort of shelved those stocks and put them aside until their stock prices were going to fall over the next few months. And that's exactly what happened. So I revisited these semiconductor companies and started to do further investigation. But before I did my further investigation, the ballpark valuation that I had was just a ballpark. We have to remember that I hadn't done massive amounts of research into the companies yet. I'd only done a couple of hours research. So they're going to be really, really inaccurate, and they're only going to become accurate after I've done my due diligence and I've looked into these companies for 10 or 20 hours or even more. And this is actually the reason that I came up with the value matrix when first looking into companies, because when you're first researching a company, those first few hours, that you're looking into the company, you're doing your Google searches, you're reading the first couple of annual reports, you really have no idea what their growth could be like over the next 10 years. You can look at what the analysts are saying, but that's usually wildly inaccurate. And you can look at their past performance, but if you don't understand the business well enough yet, then you don't know if they're going to be able to replicate that growth over the next 10 years. So the growth rate that you're going to come up with initially could be wildly inaccurate. And for that reason, I like the value matrix, because you can choose a wide variety of growth rates when you don't really when you haven't pinpointed an accurate growth rate yet, because you haven't done the research. So then of course I did my further research into semiconductor companies, and essentially I started to lose interest in investing in those companies for two main reasons. The first reason is that I realized that the semiconductor industry is definitely one that is outside my circle of competence. And basically what I mean by circle of competence is that I don't think it's a business that I could accurately understand, and that I could accurately estimate where companies could go in the future. It's a really complex industry. There's a lot of moving parts, and I think that unless you work in that industry and you work with semiconductors, building them and that sort of thing, I think it's going to be very difficult for you to thoroughly understand how these companies make their money regularly, how they spend their money, and what they do with their money within the business. And for me personally, that just put me off from investing in that company, because of course it's really important that we stick to businesses that we can completely understand, and often this means that we have to invest in business models that are quite simple. Warren Buffett is quoted many times to be talking about the importance of a circle of competence, so I made an entire video on the circle of competence, which I'll leave a card to above, and I'll leave a link to that video down in the description below for you to watch after this video if you want to learn more about circle of competence and how you can use it to your advantage, and to better and improve your investing strategy. And the second reason that I started to lose interest in semiconductor businesses is that I realized that the growth from peak to peak in terms of the semiconductor business cycle can actually be quite slow. And you could argue that we're currently near the peak of a semiconductor cycle, which means that low double-digit growth might not be achievable by these companies. Because we're at the top of the peak, we might over the next 5 years see their revenue and their earnings per share decline. And from this peak to the next peak in about 10 years or in about 8 years or something like that, maybe their growth is only going to be 2 or 3%. So for that reason, it also put me off. One, I didn't understand the business well enough, and I don't think I could understand the business well enough. And the second reason was that I think that I initially overestimated their growth potential from this point in the business cycle. So in summary, I'm certainly not saying that semiconductor companies aren't a good buy right now. I'm not saying that they won't go up. I'm not saying that they're definitely going to go down. I'm just saying that in terms of understanding the business, I don't have the expertise or the knowledge in that area in order to accurately predict where the company will go. And for that reason, I have no interest in investing in it, because that would mean it's a complete gamble. However, I want to be clear. The mathematics that I used in those videos in the past is still entirely valid. If Applied Materials does grow at 15% per year in terms of EPS from this point, and you can sell it at a 20 PE, then it's probably a buy right now. You're probably going to make about 7 to 8 times your money over the next 10 years, which is a massive return. The big if in that is the 15% growth rate. I don't know how they can grow because I don't understand the business, but if you have done your due diligence, you've researched the company over many hours, and you've come to an accurate growth rate that they can achieve over the next 10 years of about 15%, then go for it. Then it's definitely a buy, because then you're definitely going to be able to get your return. Now, there's one other thing I just want to mention, and that is that there is a distinct difference between the growth estimates that I make in those individual analysis videos and the growth estimates that I use in the companies that I hold in my portfolio. As I said earlier, in those individual analysis videos, I'm usually doing my research for the first time, and it's the first 2, 3, or 4 hours of research into a company that I'm doing, and for that reason, the growth estimate is usually just a ballpark prediction. But when it comes to stocks in my portfolio, I've already done 10, 20, 30 hours or even more research into a specific company, so that I've come up with an accurate and conservative growth estimate for that company over the next 10 years. So I know where that company's stock price should be in 10 years time, if not much higher than that. So the difference between those two is really that one is just a ballpark from, a couple of hours of research, which is definitely not enough to make an investment. And in terms of the stocks in my portfolio, I've done much more thorough research, and I would be much more confident in those growth estimates that I've used to value companies that I hold in my portfolio. So I hope this was an interesting video for you guys. I just wanted to speak about this because a bunch of you guys were messaging me, and I sort of want to have a place that I can send people if they ask me in the future, because I've been getting a ton of messages about this recently. So I just wanted to consolidate my thoughts into a video and present it to you guys. So I hope you enjoyed that, and if you did, make sure you leave a like. Let me know that you enjoy these videos. If you're new around here and you want to see more, we post 3 videos about stock market investing every single week. So hit that subscribe button and hit that notification bell so you don't miss out on any of the videos coming out in the future. But for now, guys, I hope you have a great day, and I'll see you in the next one.